Did you know that the first and second property you buy in your portfolio will help you determine whether you're going to end up in the top 1% of property investors, or you're just going to end up like the majority that fail to get to financial freedom through property? In this video, I'm going to share with you great examples that clients have been purchasing, some deals, and I'm going to share with you my thoughts around what the market's doing, as well as what the media is saying and where you should probably listen. If you guys are interested, keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. Now, before I go on to share 4 great deals from all over Australia, I want to urge you to keep an open mind as you go through this video. Forget the fact that I run a buyer's agent. Forget the fact that I'm a buyer's agent that helps clients build property portfolios. That's what we specialize in. Only investors, no owner occupiers. And I want you to think about what you're seeing in this video compared to what is being shown on the mainstream media. The reason I'm framing this conversation in this way is because I know straight away someone's gonna go,
"Whoa, you're trying to sell me something, so you just cherry pick some great deals. Or you have an agenda."
Now the truth is, my only agenda, and I'm fairly transparent about it, is I wanna bring you videos at scale because that's how I can help as many people as possible with the time constraints I have. And for the select few that are actually watching this going, this might be too hard for me, or I'd rather outsource this to someone professional who does it day in, day out with their team, then these videos can act as a way for you to contact me. Now with that, let's continue. Now buying property in Australia is actually super simple. You go online, find an ad, contact the agent, and if it's available, throw an offer. If they accept the offer, make sure you've got finance and you've purchased a property. 6 weeks later, you've probably settled and now you've got property under your name. Congratulations. The problem is that because it is so easy, people often overlook the intricacies of buying a property. They often go, well, I'm just going to listen to someone that told me I should buy property, like my uncle or auntie, or maybe it's my parents, or maybe it's a friend at work that suggests that I should go into an area because they bought 12 months ago and it grew. Now, sure, you could get lucky with property, take on some debt, buy the right one, and then it goes up in value. But to repeat that twice and to possibly repeat that 3 times is going to be extremely difficult. And so what you don't want to do as you go through and take on debt is to go out and rely on just luck, to think that you've got all the bases covered to be able to go out, take on 400, 500K worth of debt, and then attach it to an asset where you hope the property goes up in value. It's too much risk. So what you need to start with is a proper strategy and create a roadmap for yourself. If you don't know how to do this, there's a pinned comment, email me and I'll help you out. But the whole idea is not to just go out and have a roadmap or have someone build something for you and say, well, that's what you can do in 15 years. Thank you so much, here you go. That's the equivalent of actually going online and downloading pretty much a workout plan, but they're not actually going to the gym, right? So let's look at 4 properties that we purchased for clients over the last few months. And believe it or not, I haven't cherry picked this. I actually tried to do this in the most random way possible. So I picked one from each state that we had purchased and I tried to get something in different timeframes over this year. I didn't go for anything in the 2021 or 2020, purely because I think those numbers are completely skewed. And I thought it would be great to look at these numbers during a year where the mainstream media has come out and said, the market is collapsing, the market is falling, and everything is doomed. And how we've been led to believe that as rates increase, you got to see property prices decrease. This is definitely not the case, and these clients are cheering because of what we've been able to do. So let's go through this property here. You can see it's a 3-bedroom brick home, beautiful location here in regional Victoria. And this was purchased for $362,000, but the market value at the time was $375,000 and the rent at the time was $390 per week. So that's a 5.6% rental yield. Now, the value today, 9 months later, is $474,000. The market rent is $420 per week. And for this deal, the client had to pay for a deposit as well as our buyer's agency fees, stamp duty, pest and build, as well as conveyancing. And all of that came to $78,200. Now, if you guys are interested in that video I made about deposits and the minimum requirements you have to have before you go out there and purchase a property, go and check out this video. It's going to help you. But I often get asked, how much do I need, Ravi, to get into property? I would say it's probably going to be anywhere between 75K and 85K. And yes, that does include our fees. So in 9 months, this property has grown by $112,000 and the capital growth is 30.9% and the cash on cash return on investment is 143%. Now, a lot of numbers there. Let me break down why these numbers are important and how we managed to do this. Now, the first part is the market value is higher than what we purchased it for. Based on our data, based on what we do, we need to go out there and negotiate professionally to get the lowest price possible for our client. The reason we try and do this is because if the client goes in and they purchase something under market value, you're then going into a deal straight away with some built-in equity, which allows you to repeat the process, to go in and buy a second property with the equity from the first property and so on. Now, in this case, we knew the market value was $375,000, but we managed to get this property for $362,000. Now, despite there being other offers on the table, they still opted to go with our offer. Reason being is they've sold other properties to us before, and in addition to that, they know that the level of professionalism we have throughout the entire process means they're not going to have issues with finance falling over. They know that they're not going to have to field a bunch of questions from like some first-time investor. They know exactly who they're dealing with, and this goes a long way in that process. The other thing you will notice is that the rent has also increased during this time. I've been a big advocate on this channel as well for my clients to show that we don't want to just rely on capital growth. We also want the rental growth. It's very important we get that rental growth because we are going to get stuck at some point if the rents don't keep up with the growth we have, because the banks will act as a roadblock in our borrowing capacities. In a year that we've seen Sydney drop by 10 or 11%, and how the media goes on to say that property prices nationally are going to drop by 20 or 30%, this property here in 9 months has grown by 30.9%. And the cash on cash return on investment is basically referring to every dollar I put in, what sort of return I'm getting. So although it's 30.9% on the overall asset value, in this case, the money they put in, which was $78,200, they are now returning 143% for every dollar that was put in. They've got a greater return than doubling their money. Now, I know I put a bit more detail into the first example. It's just to give you context around what these numbers all mean. So you're actually getting some value and me not just showcasing some deals, and I'll go a lot quicker through the next couple. The next property is in Metro Perth, so in Western Australia. We purchased this one for $410,000. Its market value was $422,000. So again, under market by $12,000, and the rent at the time was $470 per week, so 6% return. This isn't in some mining town in the middle of nowhere. This is in Metro Perth. So to be able to get something in capital cities, and yes, I am a regional fanboy, but the numbers just need to make sense for me to go and purchase anywhere. And that's the reason I don't focus on the main capital cities like Sydney and Melbourne. It just doesn't make sense to me. Now, the value today, 7 months later, is $485,000, and the market rent is now $500 per week. In order to complete the deal, the client had to put out $80,100, and that included our fees, and the equity in 7 months has been $75,000. The return on investment was 18.3% capital growth, and the cash on cash return on investment has been 90.4%. This is crazy because our clients would never have gone to Perth. They didn't even know this location existed, and they were very skeptical in finding someone online like myself on YouTube to then go ahead and pay a buyer's agency fee to go and actually acquire this property. But now that they've done it, they've gone on to purchase another 2 properties in the following 6 months, and it's because they understand the process. I totally get the fact that you're seeing someone online selling a service, you're like,
oh my God, I don't want to do this. This sounds so dodgy.
And then you ultimately go and buy something in your own backyard, but if it's not growing, you've got to see the dollars that you're putting in, what sort of investment you're getting back. I've always said that you've got to treat property investing like a business. If you're going to get emotional about it, you're probably going to fail, and you need that logic to stay away from the emotions to actually get the results. Number 3 is a property in regional New South Wales. So you can see what I'm trying to do here, showcasing what sort of deals we can get at what sort of numbers. So regional New South Wales, we picked this up for $371,000. The market value at the time was $380,000, and the rent was $370 per week, at 5.2% rental yield. You can see the rental yield's a bit lower in some states than they are in other states. Now, the value today is $415,000. The market rent is $410 per week, and in order to complete the deal, the client needed $73,700, and the equity in 6 months has been $44,000. That means capital growth of 11.9% and a cash on cash return on investment of 59.7%. Now, given that this was purchased 6 months ago when there was a bit more hype in the system because, rates had just only started going up, we can still see so much growth in these properties, and they're still growing, not just from a rental capacity, but they're also growing in the capital growth perspective. And it simply comes down to demand and supply. I know so many people are talking about how rates are pushing up, so prices need to come down. Well, they're going to come down in the top end of the market. And you'll know this if you've been around when the microphones weren't as great, the audio quality wasn't as great, and I wasn't as entertaining as now, that the focus has been on the bottom end of the market, the affordable market. That's where we're going to get the highest cash on cash return. And the final deal here is Metro Adelaide. It was very hard to pick up a deal here recently, but we were picking up so much in 2020 before all the hype. And here we purchased this one for $379,000. The market value is $390,000 at the time. The rent was $370 per week. So see, slightly less than what we could get elsewhere. And the value today is $425,000, with the market rent being $440 per week. So again, the rate of growth in different areas is going to differ based on the location as well as what we're picking up. The client had to put up $81,100 for this deal, and the equity in just 5 months has been $46,000. That means the capital capital growth equates to about 12.1%, and cash on cash return on investment is 56.7%. Imagine buying this property 5 months ago and then just having equity build up 10K every single month, tax-free. That is the dream. Having a portfolio that grows in the background, you not having to do anything, means that you can go out there, enjoy life, as well as enjoy the benefits of having the positive cash flow to take care of the property and its expenses. Now, about 18 months ago, I shared a video of recent deals that we had done. You should definitely go check that video out. I checked it out just before I had to make this video, and boy, was I depressed. Just seeing how cheap the properties were back then and how much they would be worth today is actually crazy. So time in the market definitely beats timing the market, but right now I feel like we're in a place where there's not as much FOMO. Majority of people are listening to the same garbage, and economists are coming out suggesting that we're going to fall again by another 20 or 30%. Is again an amazing opportunity for those looking at the right places. Again, if you want to do this yourself, you can. It's definitely not impossible, but we're able to do it at scale. If you are interested in using our services, there's a website where you can book a free call, or you can email me directly and ask me whatever you like. If you guys have enjoyed this video, smash that like button and subscribe, because I'm bringing out videos every single day on this channel, and they're for free. So with that, I'll catch you guys in the next video. Thanks, guys.